Bitcoin has just retested 36,000. Are we going to see a blast through this resistance, or could we see a correction from this level? Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be taking a look at the short-term price action of Bitcoin, as Bitcoin has just retested the major $36,000 resistance. We're going to be discussing our high time frame price projections if this level of resistance does break, and the possibility for a correction from this level, slash where Bitcoin could go on the high time frame if a correction develops. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in trading, you can join our VIP group. We post trading signals with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. Not only will you get access to our VIP group of over 600 members, you'll also get access to our group chats, our general chat, our trading chart and education chat, our help chat, our video chat, our news chat, and of course, everything else. If you're interested in getting access to all of that, go ahead and contact me in the pinned comment of the free channel for more information. Let's dive into a video. So starting on the market data, Bitcoin has seen a 17% reduction in 24-hour trading volume, sitting at 79 billion. With that 17% reduction, we do see liquidations come down as overall volume and volatility is reduced. Liquidations are down to 74 million, which is a 46% reduction in the last 24 hours. Taking a deeper look at those liquidations in the last 24 hours, out of the 74 million, we do see 25 million in short and long liquidations and close to 50 million in short liquidations. Moving over to the volatility index, we can see on the 30-day, we are starting to move downwards very, very slightly as the price action is still ticking upwards. Again, this could be a sign of exhaustion, something we are watching moving forward. And on the 60-day period, we are seeing similar things occur over here. Again, the price action ticking upwards and the 60-day volatility index starting to move downwards. This is not always going to be a clean and cut dry, meaning scenario, where we're going to see exhaustion, we're going to see the price action correct, but volatility dropping signifies compression, it signifies consolidation, it signifies we generally will see an explosive move from this compression zone. So we are expecting, again, a large move for Bitcoin when that volatility starts to pick up again. Moving over to the DXY, taking a look at this, guys, we are still finding support on the overall inverse parallel or parabolic curve, this blue line over here. If we do break below this level, that will signify a breakdown in the trend and a continuation lower, looking for a retest of the 103 to potentially 104 level. This is going to be our lower level of support. Again, we do have this short-term neckline of resistance we are challenging. This is around 105.6. If we are able to break above this level, you can see we've retested it 2 days in a row now. We will likely see a continuation upwards. And again, if we get a continuation upwards, this will be bearish for the markets. Bearish for crypto, bearish for the stock markets. If we do see a correction downwards over here, that will be very, very bullish for the stock market and very bullish for cryptocurrency as well. So keeping our eye on that. Now, we do have some very important upcoming news, which is going to primarily be the Fed Jerome Powell speech, which again is on the 10th. That is actually tomorrow at 5 a.m. So it's actually in less than 24 hours. We're looking at that, guys. That is going to be pretty important. And of course, we have the most important economic data coming up, which is going to be that interest rate data. I believe that is going to be on the 14th, right over here on the 14th, which is in 5 days from now. We have our inflation data, sorry, not interest rates, our inflation data, our core inflation data, and month-on-month, year-on-year inflation data, guys. Keep an eye on that. If we do see inflation rising again, that could potentially be damaging for the future as it could potentially increase or result in an increase in interest rates down the line. Again, if we do take a look at that overall curve, the relationship between rising inflation and rising interest rates, we can see that interest rates are always going to be lagging to inflation. This is our overall curve. The curve of interest rates develops or forms the trajectory and basis of perceived systematic risk, and the perceived systematic risk is essentially the overall perception of risk in the market. When the perception of risk increase, price of risk assets generally do decrease. So right now we have seen inflation plateau, and then we have seen in the last 2 months inflation come back up a little bit. If we see inflation come back up again this month, it will likely suggest interest rates are going to move from their plateau period, their pausing periods, to maybe even more hikes. And if we start to get hikes, that could potentially be bearish. So best case scenario, we see inflation come back down, we see a reduction in inflation, and that will again reduce the probabilities of rising interest rates and allow the markets to continue upward. Moving over to the stock market, the S&P 500 is still challenging its uptrending resistance. Again, over here, the uptrending resistance we broke down from a few weeks ago to result in a retest of 4,100. We are now back over here retesting that respective level. If we do see a rejection from this here, this will be very, very bearish, and of course will represent a continuation in the downtrend. If we're able to break above 4,400, that will be bullish and result in a deviation above this little range over here and likely push the price back up to 4,500. Moving over to the Dow Jones, a similar scenario over here. We have that neckline of resistance we can see right over here, and if we break above that level, likely continuation up to around 34,800, and if we fail to do so, we could come all the way back down into this range of support. Let's go ahead, guys, and jump over to Bitcoin. So in today's video, we're primarily focusing on the short-term price action, what is happening on the charts, what are the key levels you should be watching out for, and how to prepare for the next move for Bitcoin. We're also going to be taking a look at the 4-year cycle, the macro charts, the total cryptocurrency market cap, and total altcoin market cap, excluding Bitcoin and Ethereum. So let's go ahead and dive into Bitcoin first and foremost. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Starting with the most important levels. If we zoom out to go over these levels again, we have to identify our key bullish and bearish triggers. If we take a look at the last 16 days of price action, we have been consolidating in this box over here. I'm going to go ahead and just mark it out as a box to make it nice and easy to see. This is kind of our consolidation range. If we take a look at the VRPV, we can see orders have been building up within this range, and we have a massive reduction in orders underneath this level over here, and a massive reduction in orders above this level over here. Therefore, we can identify the upper level as a bullish trigger. This bullish trigger being 36,000. A break over 36,000 will result in a breakout of the last 15 days of consolidation and likely resume a uptrend higher. We'll discuss in just a moment where our targets will be if that occurs. And of course, a breakdown of the lower range of support will result in an entrance into this low historical resistance range. Okay, this is an area of which we have less resistance. Therefore, if we have negative momentum and negative velocity moving into this range, we'll likely see the price action pick up speed toward the downside. We could see a correction or a crash actually occur if we break below this level. So first and foremost, those are the most important levels from a structural perspective you need to be watching out for. A break above 36K breaks the price action out of the last 15 or 16 days of consolidation, results in a continuation higher. A break below 33.35 results in a breakdown of that respective range and results in a continuation lower. So what else are we looking at? On the short term, we are looking at the overall trend. We have this uptrending diagonal trend line. I'm going to go ahead and actually turn this a little thicker so we can see it. This thick black line over here represents the overall uptrend of the price action within this consolidation phase. So in the last 15 days of price action, this cluster of price action, we have been in a slight uptrend. This again is representing the trajectory of price action into resistance and therefore represents the trend or the support of this trend. If we do see the price action lose this level, that will signify we enter a downtrend towards the lower range of the support within this high time frame consolidation. Therefore, if we do see a breakdown of this level, we can expect a correction down to 33,350. Okay, until then, while we remain above this level, we are in a uptrend moving into resistance, and the likely scenario is still going to be a break toward the upside. On the even smaller time frame, guys, let's go down to a 30-minute chart. We do have some important levels we are watching out for. Primarily, a very important level we're watching out for is going to be the 35,300 level, the 35,300 level represented by this black trend line. This again is acting as a nice base of support for bullish momentum and strength on the short term. If we do lose this level, we are likely to come back down to retest that uptrending support line. On the short term, we do see a rejection developing from that 36K level. We do have a potential bearish divergence playing out, but again, guys, in these aggressive uptrends, every correction is likely to be less, aggressive than we would likely expect, and these moves upwards are generally more aggressive than we would likely expect. So I wouldn't be taking any late shorts on here. If you're going to be shorting, again, you have to be looking for liquidity grabs above resistance or resistance itself. If you're catching shorts late, you're likely going to get chopped, or you're likely just going to get wrecked on those corrections, as they're not going to dip quite as low as the TA would generally be suggesting. So short-term price action, we're really pinching close to this trigger point, a decision zone, an area of confluence that we're watching out for a break upwards. So let's go ahead and zoom out. If we see a break upwards, how high could we go? If we see a break downwards, right, a break downwards, we're talking about a loss of 33,350. How low could we go? So let's start on the downwards break, as it's going to be a lot easier to explain. If we lose the 33,350 level of support, we're going to go ahead and draw it in. So roundabout over here, it's going to go nice and rough. If we lose that level of support, the next likely area of support is going to be the 32 to 31.3K level. So we lose this level, we're likely going to see a correction to 31.3 to 32K. On the higher time frame, provided we remain a monthly candle, okay, a monthly candle above 32K, we are technically in a macro uptrend. So Bitcoin could theoretically come all the way down to retest 32, potentially 31.3, even down to 30,000. As long as it closes a monthly candle above 32,000, the macro uptrend for Bitcoin remains intact. I'll go a step further. Provided Bitcoin remains in the overall uptrend which has developed, which is going to be above this uptrending black horizontal diagonal line, we will remain in a uptrend. So even if we see a correction, the bulls will not be losing control. It should be considered a healthy bullish correction if we do see that correction downwards, okay? It only becomes a problem when we start to see momentum on the high time frame flip negative, meaning the RSI trend line is broken downwards, and we start to see the trajectory of price action loss, the trend of price action loss, which is this uptrending diagonal trend line. Only at that point does it become an issue for the high time frame strength of price action. Until then, there is no question that the strength is there on the macro charts, and Bitcoin is in a macro uptrend, as we've been saying for literally 10 months if we would break above 32,000, okay? So how high could Bitcoin go if $36,000 is broken? This is where it gets pretty interesting. So let's go ahead and zoom out to maybe, let's go a day. I think a daily chart is actually, let's go a 3-day chart, just get a little bit more visible range on this chart over here. So if we take a look at the 3-day chart, what we are looking at for these high points is we're looking for previous highs, and more importantly, we were looking for areas of resistance on the chart according to the VRPV. So a very, very obvious one is going to be this range over here, around 40,500 US dollars. If we take a look at the VRPV, we can also see we have this little bump around 40,000 US dollars, which will tell us as we approach into the 38 to $40,000 range, we're going to start to slow down in price action. The volatility is going to start to decrease as we run into an area of higher resistance. So if we do break up from 36, I'd be expecting us to enter at least 38 and potentially as high as 40,500 US dollars. Okay, if we get above 40,500, we then enter a higher time frame continuation to 48K. But again, guys, we cannot expect the price action to be only up. If we go all the way back to prior cycles, you know, we've seen periods of rejections and pullbacks in these phases. If we take a look at where Bitcoin theoretically is right now in terms of historical ranges, Bitcoin would not be above this level, right? If we take, I'll show you on a monthly chart in just a second. If we refer back to prior cycles, Bitcoin would kind of be in this area around over here, okay? Potentially maybe in this, actually, I would say this is a pretty good example to where Bitcoin would likely be. The reason being is because this trigger point is going to be the trigger point for a continuation into a bull market, and on a monthly scale, we have not quite triggered that level yet. So if we go to a monthly chart and take a look at the 4-year cycle, we can see on a monthly scale, the trigger for a bull market was going to be a monthly candle close above the dotted trend line. The dotted trend line was sitting at around 12,000 US dollars, which is going to be the dead cat bounce high of the first high of the bear market, respected resistance at this level. And again, we broke above here into the bull run within our green zone, which again is going to be our bull run zone according to our 4-year cycle. So if we take a look at the current cycle, we haven't even reached that dotted trend line, which is a dead cat bounce high of the prior bull run or bear market high. Okay, so this again is an area of confluence we are looking at that is sitting at 48,000, which leaves me to believe again we're not going to be entering a technical bull run, okay, until that level is reached. If we take a look at the next bull market, we have to take a look at the overall strength of price action. Again, a bull market is not just the prices going up. The bull market is the prices going up aggressively for an extended period of time, okay? So we take a look at the overall trend angle of price action from the lows towards that dotted trend line, and then from that dotted trend line towards the high of the bull market, we can see a significant shift in the overall angle of the trend. We move from about a 30 to 40% degree angle to a 50 to 60% degree angle, a 50 to 60 degree angle, which again represents a massive shift in volatility, a shift in volume, a shift in demand, and again, the price action is aggressively going up in comparison to prior price ranges. That is a bull run. So this isn't me saying we're not in a strong market. We're in a monthly uptrend. There's no doubt about it, guys. We've been telling you this for months, ever since all the way back in this range. We're telling you we will not enter a monthly uptrend again until we break 32K. We are in a monthly uptrend. We are just not in a what you would call a traditional, you know, pedal to the metal bull run like we saw over here. That still has time to develop. According to the 4-year cycle, we will likely see that occur after the halving for Bitcoin. The halving for Bitcoin is in April 2024, so we're also watching out for that. Furthermore, I would also like to bring up this indicator. I'm going to go ahead and bring up the Ichimoku cloud. And I haven't tested this one personally, but it's something I've been watching out for, and it's one I'm actually going to be keeping an eye on moving into the next bull run, or this bull run coming up. I want to watch it over the bull run, and I also want to watch it moving into the bear market, as historically it seems to be pretty good at predicting high time frame reversals. If we take a look at the baseline of the Ichimoku cloud, we can see we broke above the baseline on a monthly candle over here. We actually remained above the baseline from May 2016 until March 2018. For 2 years, we remained in an uptrend above the baseline of the Ichimoku cloud baseline. That again is going to be our bull market. When we closed a monthly candle below it, we actually remained below it this entire time until we broke a monthly candle back above it in May 2020. We remained in an uptrend since May 2020 all the way until May 2022. Do you see the pattern? It's May, add 2 years to May. Break below, add 2 years to May, break below. We broke below here in May 2022, we add 2 years, we're looking for a break above in May 2024. If we draw that horizontal line from this point to there and assume it just continues sideways, that could mean we would not expect the price action to break above 43,000 until May 2024, according to the pattern we have seen over here. That is something to watch out for. That is actually quite interesting. It's an interesting thing we've noticed on the chart. I haven't seen anyone else talk about it, but not only is it going to be interesting in predicting the next start to the next bull run, like official start to the bull run, but maybe even the start or maybe a late start for the next bear market. Of course, it doesn't predict the exact tops of the bear market, but it definitely predicts a major area of capitulation for the bear market. If we take a look at when we actually close below, we enter the aggressive pull down phase, that aggressive capitulation phase soon after. So something to watch, guys, something to add to your watch list. A little indicator to chuck in your back pocket and keep an eye on them in the next 2 or 3 years and just see how it develops. So it might be a pretty useful tool at predicting when that bull run is going to start and when that bear market capitulation phase is really going to kick off. So thanks for watching, guys. Hope you have a fantastic rest of the day and enjoyed today's video. Make sure to check out our second channel, our altcoin video channel. It is MegaWhale Alts. You can find the link to the channel in the homepage of our primary channel here. Thanks for watching. I'll catch you in the next one. Cheers.